Hello. I'm a bit frustrated this morning, so this might come out a bit odd. And I know putting it together it's a bit different to how I normally put it together. But let's go. Spanish regions produce budget surplus. From the Financial Times. Spain's autonomous regions collectively produced a small budget surplus in the third quarter of this year. I don't believe it. This is what started me off. I mean, if this is right, there is a chance for the world. But I just don't believe it. I would like Elena Salgado to come to tea and we could have a chat, because she seems an awfully nice person. But I'm afraid I just don't believe it. Elena Salgado, outgoing finance minister in the socialist government, announced the figures in Madrid on Monday, just over a week after her party lost the election to the centre-right Popular Party. What can I say? I just don't believe it. Those regions will not have got themselves under control. I don't think. Right, over to the UK. This is the Office of Budget Responsibility who release a thing every month. Now, I'm really not sure because I don't keep that much tabs on the UK and their website's absolutely horrible and I'm revolted going there every time, so I keep away from them. I think they've been set up, this Office of Budget Responsibility, to keep an eye on the government so the government doesn't spew out spurious numbers. Now, in its October 2011 statement, down at the bottom I've highlighted it, but if you read it, the whole thing's horribly written. I mean, it's horrible. PSNB, and that's the public sector net borrowing, for the first 7 months, 2011-12, was 10.4 billion lower than in the equivalent period last year, and says as long as they do keep going for the end of this year, they'll be all right. They'll be lower than last year. In other words, they're bringing their public service net borrowing down, and it's not far off. UK's got April to April tax year, which makes everything complicated, but basically they're saying it's not far off. Now, so I got to this because somebody highlighted it, saying, look, the UK is doing well with bringing its money under control. And again, I just go, I didn't have the facts. I just go, I just don't believe you. You know, it's feelings. It's not anything scientific at all. And so I thought, well, this time I'll have a little dig. I'll go to the website, the Office of National Statistics website, another absolute horror of a place to go to. And the October 2011 finances there. And again, you get the same charts, or charts based on the Office of Budget Responsibility things, that says that green line there following the grey line, showing, you know, we're under where we were last year, we're on target and all that sort of stuff. And I haven't done the numbers for this. I really should have done the numbers, but I'm a bit pushed this morning. Later, down in the bowels of these bits of information, public sector excluding temporary effects of financing interventions. In other words, you put the banks on this and everything looks worse. But they still haven't got their chart right, you know, with October 2011 and 10 kind of offset squiffy over on that side. It's only a small thing, but couldn't they get that right? But these numbers, 2010 numbers, 837 billion. And 2011's 967 billion. I was at this stage, I said to myself, I will have done the calculation to say how much more that is. But this is what I do with America. I don't like the way they do this, where 8.3% of debt to GDP and all this. The government numbers that come out always seem too low. The best way I like to do it is go to the number that, let's say the debt clock said the debt was that 14, I call it the 14 trillion number. The 14 trillion number, where it was on January the 1st 1 year, and what that number says January the 1st the year afterwards, because that is what the debt has gone up by. as opposed to they take out all sorts of things like military spending in Iraq and things like that before you get the change numbers, but you can't really change the number where it's just one number January the 1st to one number January the 1st. Now this is one number October 2010 to one number October 2011. Now, as I say, I should have done the calculation, but to my mind, going up from 836 billion to 967 billion, you do the math, or for UK people, you do the maths on that and tell me what percentage that's gone up. To my eyeballing, that's gone up an awful lot. And whether that's following these nice little green lines and grey lines in the Office of Public Budget Responsibility says this is good or not, I'd say that was looking horrendously terrible. But what do I know? Nothing this morning. I can tell you I know nothing this morning. Financial Times this morning. A couple of bits, because the Treasury boy in the United Kingdom is going to get up on his hind legs and spout some nonsense today. The Office of Budget Responsibility's revised outlook, this is Financial Times talking about the first mob, the OBR, revised outlook will move the official forecast into line with those of others, such as the Organisation for Economic Cooperation and Development, the OECD, which on Monday said the economy was already in recession. It also predicted Britain's underlying government borrowing was set to be worse in 2013 in the UK, going to be worse than in Europe's crisis-hit economies such as Italy, Spain, Portugal, Ireland and Greece. Pop that in your pipe and smoke it. Robert Choate, chairman of the OBR, made it clear in September he was minded to cut the official estimate of the potential speed of recovery because productivity had grown so slowly. Really? Now this is the guy that's checking up on the government. Well, if he's minded to do it, just damn well do it. Get it in your figures, boy. The next paragraph is, having seen the forecasts, Prime Minister David Cameron hinted last week that the weakness in the recovery would continue, because controlling Britain's debt was proving harder than anyone had envisaged, and was acting as a drag on growth. Well, shock friggin' horror. There's a real shocker, isn't it, really? This is why I'm a bit frustrated this morning. It is the reading of last night about the euro breaking up. And I couldn't find anybody that was making any sense. I found 2 or 3 things that made sense. Out of 100, let's say. 97 was... it didn't feel right. Yeah, I'm using a lot of feeling at the moment because none of the real information seems to be biting. Right, let's go to China and get some real sense out of these Chinese people that know how to run an economy. China bans ads on TV drama and films. China has banned advertisements during dramas and movies on television, the Communist Party's latest move to assert control over the country's increasingly commercial media industry. The rules, which come into effect in January, ban TV stations from running ads during films and drama episodes that run for 45 minutes or more. Analysts said they could slow the world's fastest-growing big advertising market next year, as the party's media campaigns start to have a commercial impact or divert TV ad budgets to other media. Haven't you always wanted these people to take ads off your watch when you're watching movies on television? Move to China. They know how to do things. I've just put this in as one of the sensible ideas that I did read of the 1, 2 or 3 yesterday for what to do about the Eurozone. I won't go into this because obviously all of them are horribly complicated. I'll just run quickly through this, and if I can remember a couple of others, I'll tell you what they are. This one is from Cantus, the German chap that sometimes writes in English, and it's a sensible idea in my mind. Government bonds, these sovereign bonds that are causing so much trouble in Europe at the moment, are one block thing. You just buy a sovereign bond, and that's what it is. This idea is to break sovereign bonds down to an equivalent way, or an almost equivalent way, to the way you invest in a company. And you've got equity in different bonds, different ways you can invest in commercial companies, corporations, etc. So do the same with sovereign bonds, which will then have different risk ratings. It sounds complicated, but it means that you've got different layers to bite into when things go wrong. It isn't the whole thing goes wrong at once. Anyway, I've kind of explained it now, and the way Cantus has got it is deposits, bonds, COCOs, which are contingent convertible bonds, which I think I've spoken about once or twice. Again, it's a good idea, COCOs, but for the equity, don't get. And then equity. It sounds a bit like sliced and diced horrible things that blew up in the old days, but you can imagine it's not a bad idea. So if the sovereign bond's going wrong, the equity slice might go first, but people with more solid, less interest obviously paid on the deposit slice are safer, and it bites up those levels. It's just an idea. Things are so bad that they need very clever ideas. A similar sort of idea was not bad, that the Eurozone, the ECB could back certain solid parts of bonds. There are one or two sensible ideas, but nothing that holds, that makes an octopus load of fingers to stick in the huge amount of holes that are appearing in the Eurozone dike. There are some good ideas, but overwhelmingly the water is pissing out of these holes. And this chart, in the end, this is what's really got me this morning, has done my head in, quite frankly. And it's from the Deutsche Bundesbank, so it's not just some blogger that's hacked it together. I mean, it's real information, and it's the percentage of customer deposits in German banks, on the liability side of the asset, the books of banks, deposits, and that are liabilities for the bank. We've done that so many times, we know that. So we've got savings certificates, deposits, and time deposits. Now, I would have thought, the logic, what I would have felt would have been the sensible thing, was that as money in Greece and euro money in Greece, the people realise, I'm going to get trapped in this, and they're going to convert it to drachma, which will be worth nothing. I'm going to open deposits in Germany, where it'll at least stay being a euro's worth, or maybe even one day get converted to a Bundesbank, a real bit of new German money. But look at this chart, 2007, 8, 9, 10, those deposits were chunking up nicely, but look at that last month and a half. It's falling off a cliff. What can possibly be going wrong? And that's going wrong in Germany, that people are withdrawing their money en masse from German accounts. German accounts are going down, not up. It's done my head in. I have no idea, but I can't help but feel again that is incredibly bad. Maybe you've got some ideas, because everybody else, I tell you, they're running out of ideas. Reading the comments on 3 different Financial Times blogs about the breakup of the euro, the only ones that were really saying anything for keeping the euro together is the ECB prints up huge, we've done that one, or, which seem to be the majority of them, it'll get so bad that they'll think of something. Brilliant. And that's where we're at now. It'll get so bad that they'll think of something. Desperate. Go.